Ladies and gentlemen, I, Arushi,
And I, Hitesh.
will commence the third and final panel discussion. In an era of unprecedented technological evolution, understanding and integrating new age advancements is imperative for our collective future. Therefore, the theme for this panel discussion is Embracing New Age Technology.
The moderator for the discussion is Mr. Anirudh Marathe, Managing Director and Partner, Boston Consulting Group. Other experts in the panel are Mr. Vinay Kumar Sangrapu, Founder and CEO, Arya.ai, Mr. Vivek Srivastava, Managing Director, Transformative Insurance, PwC India, Mr. Sundar Krishnan, Chief Risk Officer, Reliance Nippon Life Insurance Company, and Mr. Prerak Sethi, Founder, RIA Insurance, and Co-Founder, India InsurTech Association.
Let me now take this opportunity to invite all the experts to form the dais as we introduce them. Moderator Mr. Anirudh Marathe is the Managing Director and Partner at BCG. With over 17 years of consulting prowess in insurance and banking, he stands as a core member of BCG's insurance practice, specializing in strategy, digital distribution, and big data analytics application in the insurance value chain. Mr. Marathe has authored significant BCG reports on insurance. He has even collaborated with entities like the Ministry of Finance and IRDAI. He's an engineering graduate from Pune University and an MBA alumnus of IIM Lucknow.
Mr. Vinay Kumar Sangrapu, the founder and CEO, Arya.ai. He pursued his bachelor's and master's in mechanical engineering from IIT Bombay, specializing in deep learning. He launched Arya.ai in 2013 and spearheads Arya XAI's R&D, focusing on AI safety. A sought-after speaker, he's presented at global forums like NVIDIA GTC, TEDx, and many more. Having authored prompt articles on responsible AI and AI governance, and was also part of India's AI task force, and was recognized in Forbes Asia's 30 under 30 list. Currently, he is a member of the Forbes Technology Council and AIM Leaders Council.
Mr. Vivek Srivastava, Managing Director, Transformation Insurance, PwC India, is renowned for championing a customer-centric model in insurance. With diversified experience in both the insurance sector and consultancy across various regions, Mr. Srivastava has spearheaded transformative global strategies with impactful outcomes. An alumnus of Narsi Monji Institute of Management Studies, he is celebrated for his unique customer lifetime protection approach and is also a frequent contributor to renowned publications. He has been recognized and awarded on several occasions, including the prestigious Advisory Excellence Award 2022 conferred by PwC India.
Mr. Sundar Krishnan currently holds the position of Chief Risk Officer at Reliance Nippon Life Insurance Company. With a career spanning over 3 decades, Mr. Krishnan's expansive experience encompasses roles in reputed organizations like DSP Merrill Lynch, Standard Chartered Bank International Indonesia, Ernst & Young, Deloitte, and many more across 12 countries. He's also a chartered accountant, CISA, intercompany secretary and checkpoint certified security administrator, and even certified in the enterprise-wide risk management program from Asian Institute of Management, Philippines. Notably, in 2011, the Institute of Chartered Accountants of India honored him as the best professional achiever.
Mr. Prerak Sethi, CEO and founder of RIA Insurance Broker, is revolutionizing the insurtech landscape with cutting-edge technology solutions for global insurance markets. Before RIA's inception, he set up one of India's pioneering health insurance websites and penned a book on health insurance. Alongside, Mr. Sethi co-founded the India InsurTech Association and offers advisory expertise to budding insurtech ventures. He has a BSc in Computer Engineering from the University of Michigan and an MBA from the esteemed Kellogg School of Management in Finance and Entrepreneurship. With this brief introduction, I now request my fellow batchmates to formally welcome the panelists by presenting a bouquet.
Thank you, everyone. Now I request the moderator, Mr. Anirudh Marathe, to kindly commence the discussion. At the end of the discussion, he may also take up some questions from the audience. So the audience may keep their questions ready.
Good evening, everyone. It's a real pleasure and honor to be with you once again. We are, starting with the last session of the day, and I'm sure it will be the best. So, with that very brief, start, I'll just introduce the topic. A few years ago, when I moderated a panel which was on the same topic, I started with a video clip which was there on the YouTube, and that video clip showed how futuristic claim settlement will look like, in which a person just banks his car, and he just from the car's dashboard he calls the call center of the insurance company. The insurance company recognizes the voice, recognizes the car number from where the call is coming, automatically detects all other policy details, asks the person to take a 360-degree video of the car. A drone comes to verify it. An Uber comes on the side for that person to go away. A towing car comes and then takes that car for towing, and the whole claim is settled instantaneously. It was 4 years ago, and at that time it was clearly dubbed as futuristic. As I was preparing for this session, I was also going through some more YouTube videos to figure out if I can show a more futuristic video than this. And in the process, I realized that there are insurers, and notably Ping An, which is many of us know is a leading insurer in China. I came across a video where they showed this as a reality in the China market with respect to the motor claim. And thereafter, I decided that, okay, I'll not dare and put out a video claiming it to be futuristic, because maybe somewhere, some insurance company, some provider has already made it a reality. This is the pace at which the technology in insurance is going. I remember two things from Bill Gates when he was asked an interview question. He said that what you see in the short term, you will not recognize it to be a breakthrough thing, but the moment you take 10-year view and look back, you realize how much distance have you traveled. And the second thing that he said is that finally the ultimate objective is to do business at the speed of thought, which is also a title of his popular book. And I think we are getting close to that reality, and I would just add that it's not just the thought, it is just the artificial intelligence. Speed of the artificial intelligence is the speed of the business. It sounds very exciting, it sounds very great, it is a very it's a topic for all the debates, whether it is online forums like these. But at the same time, many of us are practitioners here, many of us are advisors who work with the insurance companies day in, day out basis, and we realize that it is a lot easier said than ever done. There are multiple challenges that we see insurance companies, the ecosystem that works with the insurance companies actually struggles on a day-to-day basis to make things happen. When we are talking about embracing technology today, we are going to talk about not only what the technology promises in the field of insurance, but also what are the real opportunities, what is going to be a real game changer, what are the real risks, because technology comes with risks. All of us know that technology has its downside as well. So what are the risks? And as the community, as insurers, as investors, as collaborators, as, let's say, government or regulator, what is it that we need to do to make it happen? Because one is to see very beautiful YouTube videos, but the other is to actually really make it happen. So with that quick introduction, I'll go back and I'll kickstart the conversation. Thank you. One of the things that we always see, and I was referring to the YouTube videos once again, is that there are a lot of innovations and a lot of things that are done internationally. But the moment we think about it from the Indian perspective, we realize that many of these things may or may not work in the Indian market. At the same time, the Indian market has its unique advantages or unique characteristics which are not available in the international markets. One area where India has clearly taken a lead in the international arena is on the public digital infrastructure. I'd just start this conversation with a question to Vivek. Vivek, if you could just talk about what have you seen with respect to the public digital platforms? And just for everybody's information, when I say public digital platform, it is the India Stack, which is, the Bima Sugam, which is likely to come in, the account aggregator framework, which is already live in that sense. These are all public utilities in that sense. So, Vivek, what have you seen and what is the promise of this?
Thanks, Aniruddha. I think a great starting question. And I see a lot of students, so I would also try to do a bit of justice with them that you get to understand what India Stack is in real sense. So India Stack is nothing but really, set of APIs that businesses, startups, and government institutions use together to solve some of the toughest problems in India and Indian economy. Now, this is really no short of a miracle, but a planned one that has happened over the course of more than a decade, right? And it is also a story of great financial inclusion that has happened over time, right? Really planned and very hard-fought one. Now, there's a good IMF paper that outlines there are 3 layers to this entire India Stack. The first layer is that of a digital identification. Back in 2010, we started the journey of biometric-based identification of our own citizen. Today, the number which is really covered is 1.3 billion. The entire population got covered. And it is not just one-time coverage, but also a very heavily active base. 770 million, if my memory goes right, about 770 million of these record was updated as of last year. So you can see the engagement levels are so high. And this did not just stop at identification. What happened on the back of it is also phenomenal in terms of financial inclusion. Look at what happens in terms of banking coverage. 500 million new accounts got opened up over the course of the last 5 to 7 years. Now, these accounts, and fantastic story that is unique to India is about 70% of these accounts are coming from rural India. About 60% out of this is coming from women who are owning these accounts. So all those who were not part of the financial mainstream are becoming part of the mainstream, right? Also look at the participation in economy and in economic activities. Now, the DMAT account holders were about 20 million about, I think, 5-7 years ago. They are about 127 million today, which is about 6-fold more than that increase. And this is not just coming from metro cities. This has come from tier 2, tier 3 cities, and there is a large participation coming from women. So it is a phenomenal story at the digital identification layer itself. Look at the second one, which is interoperable payment. That story starts somewhere in 2016, if my memory goes right. And this UPI journey that we begin, it really helped a lot of micro, small, medium enterprises to really work with banks and NBFCs to really work on a financial transaction engagement. All those could not participate in those financial transactions and were really left to mercy of cash, were part of digital financial transaction ecosystem. And more than 500 million merchants are operating today, part of the mainstream. And it goes without saying that more than 50% of digital economy is contributed by UPI. So it's fantastic the way it has evolved. But the third and the last layer is of consent-based trust, which is a recent, I would say, evolution. Back in 2021, government started account aggregator concept, which is to mutually intermediate the data exchange between financially regulated entities and also individuals. Now, and we have more than 170 million DigiLocker account users today who are giving consent-based, totally paperless, person-less approvals of, and consents, right? So massive opportunity. The way India's story has panned out for financial inclusion is fantastic. Insurers are here to gain, is my perspective.
Thanks. Prerak, I'll come to you. You know, Vivek really painted the picture really well in terms of what India has built with respect to the public platforms. Where do you see insurers in this journey and how insurers can really take advantage of this and how collaborators like yourself can play on the back of it?
So actually, Vivek, thank you. That was a great summary of thinking about the India stack and what we've got to do. So as Vivek mentioned, classically, if you look a few years back, the challenge always turned out to be for insurance companies that, look, we've got these insurance products. We've got to go distribute them. There were the traditional models of kind of going and distributing these products. But then they started to look at all these other journeys that were broken, right? The distribution journeys were broken. The claims journeys were broken. When you had to come up with a brand new insurance product, then you had to figure out how to get it to the end customers. The beauty of what's been laid out over the last 5, 7, 10 years through a lot of these infrastructure or platform layers is the fact now that insurance companies can start to build a number of new and innovative insurance products. They can actually pick up a lot of these public infrastructure layers, right? The KYC identity layer, the consent layer, the payments layer, and then kind of leverage these to push out a lot more products very, very rapidly on the ground than ever before. So one advantage that we'll see over the next few years for insurance intermediaries will just be out and out. Look, how do we build more insurance products for the market that's out there? That would be number one. The second is out and out automation, right? So you gave the example, Anirudh, you were talking about the Ping An example, the car claims example. How does that actually come true now? You know, everything from starting from the onboarding to the claims adjudication, the payment of the claim can now be digitized. There's a method and a way towards actually us reaching a large chunk of India towards getting that done. So that would be a second set of innovation that we expect to see. There are, by the way, a number of insurtech companies that are focused on these kind of problems. So what they are doing, right, they're trying to say, hey, insurers, I'll solve for the payments problem. Hey, insurer, I'll solve for the claims adjudication problem. They're going to these insurers now and saying, we are building on top of the India stack. We are building on top of the account aggregator framework from a data perspective. They're saying, hey, we figured out how to do distribution through the banker channel, right? We build these pipes to the banker channel. Now, you as a single insurer does not need to go do an API integration. Instead, plug into us, and we will take 27 insurers in one go back out to the banker channel, right, to take advantage of the bank accounts. So a lot of innovation is coming from, number one, the insurance companies that are now saying, hey, we've got the public infrastructure laid out, the public digital workflows laid out, what do we do on top? Second, there's a set of insurtech companies that are coming in attacking very specific problems, and they're taking it both to the insurers as well as some of these distribution partners, garage partners, healthcare partners, and innovating on that front. Very specifically, I always turn to something like the Ayushman Bharat Digital Mission or the National Health Authority. It's amazing what they're laying out right now after the UPI movement to say, hey, how do we connect the hospitals with the insurers? How do we actually bring in an exchange in the middle? So the number of value-added players that are waking up in India that have health tech companies that are saying, hey, I've got to become a value-added services player to the insurance industry is just crazy. The amount of interest is amazing. So the health tech companies are saying there's a new method for me to monetize what I've done. It's B2B2C. I no longer have to sell directly to consumers. I can actually go to insurance companies, plug in my products into them, and then monetize. And we're seeing the same trend with climate tech companies. We are seeing the same trend with mobility tech companies, where they're all looking at insurance and say, hey, how do I become a value-added services player to the insurance industry to take advantage of their kind of might. Yeah.
Thanks, Prerak. A lot of what you said, it has a bit of a future promise. There are some pilots, etc. What we see happening on ground at the same time is that this kind of a public digital workflows need public data platforms as well. Sundar, I'll take your view on how do we really look at the public data platforms, especially from an insurance standpoint. I mean, you look at IIBs, there is no direct parallel to the credit bureaus in the insurance industry, but a need of the hour is also a very good public data platform. Where do you see industry on that route, and what do you expect to happen in the next few years?
Yeah, I think it's very, very important that the insurers hook onto the public data platform. Because whatever revolution you're trying to achieve, you need a data infrastructure to authenticate the customer beforehand. And once you get data of the customer, the persistency, the level of knowledge that you have, the claims, speed of settlement of claims, everything goes up. So whatever theoretical outlook you have had before, or projected outlook, it's not theoretical, it is practical. For instance, I mean, we launched digital transformation about 8 years back, and we noticed that the Aadhaar, with Aadhaar authentication online, we were able to issue policies in 2 minutes to many of our customers. It's not possible to issue to everybody. We are present in tier 1, tier 2, tier 3, tier 4. In fact, our rural penetration is something like 36%. Everything online, digital. But, you know, it's not, so you don't need the sign of the customer because it's done through digital authentication, but yet our agent goes and meets the customer personally and uses the pilot or the laptop or whatever, and then logs on and launches the. So today is about 98% digitalized, totally. Very little manual work. But having said that, is it manual, real-time authenticated and real-time efficient? No. That's where the question comes. How do you utilize the tech platforms that you have? And IIB is somebody I was personally involved from the Live Council side, and I'm still in the committee of IIB. And I could demonstrate to the board how successful I utilized IIB, before IIB and after. I mean, we could see that the level of fraud prevention, persistency improvement, and knowledge about customer goes up a lot. Because most frauds, the fraudsters tap 3 or 4 companies. And so if you have data of other companies' experience, that really comes very handy in settlement of claims. Because you need evidence. And then you tap into that database, get the data, and then you get your investigators to get the data. And so you would have evidence to prove that, you know, it's a fraudulent claim. And of course, generally fraudulent claims comes in about 3 years' time. And that's what the Section 45 allows you to cancel the policy. So, and that doesn't come even in the claim settlement ratio because the numerator is down. Your numerator and denominator both goes off. And so it's still, you can project a good claim settlement ratio because you cancel the policy beforehand, after you issued the policy, which was not possible about 9 years back. It was quite a challenge when I started this. When the claims used to report to me, I started this practice of cancelling policies. He said, nobody has done. I said, let's go to IRD and discuss. IRD was supportive. He said, no, I think what you're doing is right because in the proposal form, the customer declares that whatever information has been supplied is authentic, correct. And also it's very much stated in the policy that if you supply some wrong information, you have every right to cancel the policy. Of course, you will have to be client friendly and whatever analytics and regression we did after the issuance of policy, now we have migrated it to pre-issuance. So most of the work gets done before the issuance of the policy. So there's a better customer service and, and there is no sales false promises that are there. Many times distributors and their intermediaries give false promises to customers and customers get tempted to join the crowd and say, let's try. And this is a problem that you have or you face. But those things are blocked by when you use digital platforms. So better the digital platforms, better it is, more efficiency, faster. And the pre-Aadhaar era, the pre-Supreme Court era, when we used to issue policies in 2 minutes through Aadhaar, and then we stopped because of the Supreme Court judgment, and now we've come back again because now they allow with the consent. And of course, now with the privacy regulations, you have to seek consent before. So you would have a separate consent form, separate voice calling of seeking consent, and separate SMSs being given to the policyholder. Obviously, as an insurer, you're supposed to keep the data 10 years after the maturity of the policy. So it's not difficult for me to get consent of the customer. And customers are cooperative. That's another feature of this country. By and large, I've seen customers are very, very cooperative. when you compare it with global customers. I mean, they don't raise a issue or they don't go to court and try and settle, no, this is my right and I won't give and things like that. So by and large. So you would have exceptions, of course. So if you see all this infrastructure, I think getting data is very important. Getting data real time is more important. Using platforms, sharing data is even more important. More you share data, better it is, notwithstanding competition and distribution.
When I'll come to you, obviously, as Sundar mentioned, I think getting that data is really important. Insurers, players like yourself are really trying to do improvements in that area. Do you see that we are in a good place with respect to data? What challenges do you see, and what is, if I were to say, what is your wish list? What is it that you would like the government or the IRDA to actually give?
Yeah, I mean, the best thing that happened in the last few years was these data pipelines, right, or process pipelines. Those have been built. Those have been tested in other products like financial services products. Now, how can we best leverage that? And we also have a bureau, kind of representation, which is IIB, for example. So we have everything. But do we have what is needed? I would say not at all, right? Like capturing the data is one thing, capturing the right data is another thing. So there is a big difference between those two.
Absolutely.
There is always a claim whenever you ask some insurer, where are you in the digital journey? Everybody claims that we are the best, so we implemented all the digital processes. We have everything that you talk in the market. But are they capturing the right data? Or they're processing it in the right manner? That's where it gets differentiated. That's what differentiates between possibly having a nice, maybe an like a car body versus car with an engine, right? There is a big difference between those two. You can run a car by, pushing it, or you can run a car through an engine. That's a big difference. That's where it gets very problematic at this stage. I'm not problematic. It may be because of the evolution stage as well. So we are in that evolution stage. We are getting to get there. But the problem that I see is the experimentation. Right? There is very less experimentation that happens, particularly from AI/ML point of view. While there is a vision to get there, unless you experiment, you will not validate what you have captured so far. The problem that I see is a chicken and egg, right? So they'll say that, okay, I don't have enough data. Maybe I cannot start with AI/ML. Let me capture the data and then start AI/ML. When you start AI/ML after 2 years, after capturing this data, and then you realize that, oh shit, I should have captured another data point, which would have increased my ROI much, much better. So this way of experimenting and adjusting this process is basically missing at this point of time. Second, okay, you did capture the data, then how can you get an ROI or a monetization out of it? Let's take IIB as an example, right? And a fantastic industry body, everybody is sharing the data. Now, what is a monetization ROI out of it? A very common comment that I always receive from an insurer, we are also a consumer of IIB data because we deploy products to consume it and do underwriting, for example, is that the data whichever is provided by IIB is not enough. There could be a lot that could be done from IIB data. That's what the next piece is, and that's what we are requesting regulators to do. You captured a fantastic data. So we are the processing engine of all this data on the insurer end. If you could give us access to this data, what we could do is, fantastically amazing kind of things. As simple as, for example, when you look at credit score report, you will have information about your personal product lending. You have information about your housing product information. You have information on your credit cards. Why can't we create a single unified report for all your insurance consumption, right? That would have been a really revolutionary. Even on the credit side, for example, so a lot of innovation happened from a data standpoint. Post that, there is a credit scoring engine, which are simply rules, weightages given. Even that was really helpful. And then came AI/ML, for example. Today, insurance lacks all three pieces. We have data, but that's not properly captured or properly communicated. Next, processing to high-ning. So that's the biggest missing piece at this point of time, and that's where we want to fill in that gap.
That's very interesting. I think one of the things that you said which really stuck with me was that you can't wait for the right data to be coming in before you start playing with the models. And the other way around is also true, that you can't create models when there is no data. And it is an evolution process where you need to start taking individual steps. There is one technology which is catching everyone's fancy, where this principle is very, very much playing out at this point in time, which is the large language model, generative AI technology. Prerak, I'll come to you again. Generative AI is obviously a buzzword. I think everybody in this room has, has worked with ChatGPT, has tried ChatGPT, and maybe some other manifestations of generative AI technology, whether it is DALL-E or there are many others. What kind of use cases do you see in insurance at this point in time, which are real, and where this field is headed with respect to the trials and errors, and what kind of use cases do you see emerging?
Thanks. Anirudh, because it's evening time, let's shake this up. Who's used ChatGPT? Who's tried to play with ChatGPT for something to do with insurance, policy, give me suggestions, something? Who thought that it gave you something useful? All right, not bad, okay. So at least, we've got a sense of everybody going to a ChatGPT, playing around, and seeing what is it that it can do, right, basically for us. So let me pick up generative AI, right? By the way, as a starting point for everybody here, generative AI, as Anirudh mentioned, a large language models is one form of AI. So I would strongly recommend everybody here look at other forms of AI too, right? Because that's not the only one that we're limited to. But for the sake of the discussion right now, it's an exciting time to be looking at generative AI, but I think the true use cases are slightly far away. So let me start for a minute and actually look at generative AI, right? So there we've got the infrastructure layer, which is the AWS's, Azure's, and NVIDIA's that are there that have taken like many billions of dollars, right, of investment to get to where they are today. Then we've got the foundational model layers. So this is OpenAI. We've got Llama from Meta. We've got models out from Google, Amazon. Everybody's churning out a model that they're throwing out, which, by the way, if you want to build a foundational model, over time, there'll likely still only be 8, 10, 12 winners and will require lots and lots of capital investment, right, basically to be a winner. So where is it that we will play as an industry? Where is likely for a second, most of us going to play, right? We are going to play on the application layer, which is to say, hey, how do I apply this to my industry, my use case? So the first point of this is to starting to look at, as Anuradha mentioned, what are the use cases in insurance that are interesting for us to play around with? First and foremost, some of the ones that stand out are customer servicing, claims. We are looking towards, being able to ingest policy documents and then being able to chat with ChatGPT to say, hey, does my HDFC Ergo policy cover this? And have it give you a response, right? That would be interesting. But what we also end up finding is it's also got parallel use cases, right? For example, in healthcare or health insurance, can my health insurer now actually give me a ChatGPT or a GPT generative AI model that lets me play around with it and say, hey, what should I do? I'm not feeling well, and I've had 104 fever. What can I do, right? Will it start to make suggestions? So what happens there? Where we are with the technology today is that on that application layer, in the space of about the last 1 year, there are hundreds, if not thousands of companies that have come up. Even within insurance, I think practically every company is playing around, right? Every tech company at least has picked up the APIs from OpenAI. They picked up a couple of these other APIs and are playing around and seeing where can they actually build applications that they can say take to insurers, end customers, take it to intermediaries, right? One point that we were discussing earlier, it's not ready. So in a regulated industry like insurance, right, can you actually today roll out a model that is 93% accurate, right? And then your sales agent or your ChatGPT model is going out, your model is talking to your customers and giving them wrong information. Unacceptable, right? Doesn't work in our industry, right? We are regulated. So while there's a lot of buzz and say, hey, can we replace the sales agent with a ChatGPT model? Not happening today, right? 7% accuracy is not acceptable, right, by us, by a regulator. Same thing, as a point of claims, right, if that ChatGPT or the GPT bot or whatever it is will end up adjudicating incorrectly and pay out an extra 3 lakh rupees, Sundar will be unhappy, right? He'll say absolutely unacceptable. The third is underwriting, interesting, but generative AI models can't do reasoning, right? Whenever I'll get into that, he's more of an expert than I am. So if they start to actually give you the wrong decision, do we expect our portfolio to bleed in 2 years, 5 years, 7 years from now? Is that acceptable for an insurer? No. So what are the practical applications, right? We should play around with this as a technology. 2 things. One, as a framework, possibly do not try to use it today, at least or till the time you're uncomfortable with anything that's customer facing. Try to see if you can bring in applications that your own internal teams can use. So can you actually build co-pilots or assistants that your underwriter, they're prompting them, right? It's called an assistant. It's assisting your underwriter with additional information. It's bubbling up information to be provided to them. Can it bubble up information for the claims adjudicator? Can it provide more information to customer support? So that's one framework towards thinking about where it can be used today. The second framework is just pure and pure efficiency. Where generative AI models are working very well is today, if you're using something, if you're, say, building a process and using something which is completely manual, can you actually use AI to get you 70% of the way there, right? And then have a human in a loop, which is eventually there's a human being, the claims adjudicator, the underwriter that's looking at what's coming out of that model, saying, hey, this is all great, mostly accurate, but there's one decision that's actually inaccurate, tweaking that and then giving the final decision. So that's maybe where we are today in terms of use of generative AI in the industry. Very exciting though, so everybody should play around with it. I am actually shocked how quickly it goes from starting, and I played around with this, right? To say, hey, I've got diabetes. Can you actually tell me, I'm a diabetes underwriter. Can you tell me how to classify diabetes, right, as a condition with HbA1c? Starts to spit out, risk scores from its side, including ranges. Then you start to say, can you give me medical coding standards, right? From National Digital Health Mission, ICD-10 standards. Can you actually start to give me the ICD-10 code for diabetes? Starts to spit that out. Prompt it again and say, oh, by the way, I have diabetes. Well, it is with these additional comorbidities. Starts to give additional comorbidities, right? And ICD-10 codes along with that. So it's much better than what we have today. Not 100% accurate. Don't trust it. Don't actually leave anything to it yet. But will it bring efficiency? Significantly more than where we are today.
It's an interesting, very interesting view. Thanks.
Example,
Sure,
if you want. Yeah. So, 8 years, 7 years back, we tried using analytics, very similar, using regression, of course. AI would be even more powerful, especially in predicting claims and predicting persistencies. And when it comes to health insurance, predicting illness. In this, the equipments, the technology would play a very important role. So we tried this, by sort of using natural intelligence or by looking at experience. We use this for some 8 or 9 parameters. Like, for instance, if an housewife is insured, say at 9.999, 10 lakhs being the medical limit, you can guess that there is something wrong to it. Exactly 9,95,000. And then you have similar such predictabilities in terms of people from certain regions. There are fraudsters in many regions. So we made something like 180 regions or 200 odd regions which were bad. And so if you have cases from those regions, we had a predictive score. Similarly, you have predictive score for above age. What happens is they morph the photo or show a younger photo and show them as 55 when the actual person will be 88 or 85. Similarly, you would have dead man insurance. So we made fingerprints as compulsory and ensure at least the person is alive unless the finger was cut and kept, but which is rare. So we use something like 8-9 parameters. But when I tried that with the analytics, which gave me propensity scores using a regression model, we tried combos. And we found that 36 variables were there, 36. When I used to do naturally 8, from using intelligence source, I could get 30, 36, 34 combos. And that gave me something like 10 crores more savings. So I had to spend about, additionally investigating, about 60 lakhs or 50 lakhs and save about 50, 60 crores of sum assured straight. And when I used the analytics model, I saved about 10 crores more when I had spent nothing for the analytics model because it was bought for persistency, it was bought for predicting claims. So 7 or 8 years back, what we studied and what we implemented, today my early claims was one of the best in the top 3 of the industry. And we were very worse about 8 years back. So that's the transformation that analytics and propensity scores brought about. But am I relying only on that? No. I use that for my investigation. And can I investigate all kinds of cases? Absolutely not. Because for investigation, again, I have to spend money. And economically, it doesn't make sense to investigate every case. So what happens by using intelligence, data, analytics, or generative AI is that you reduce the cost, You pinpoint problems exactly, and your score or your investigation becomes lesser. And that's the kind of savings you get by using, generative AI. And there are many such case studies in claims and persistencies.
So it's a great assistant, certainly. When I'll come to you, the assistant is not fully reliable at this point.
And it's completely a black box.
And also, it requires some kind of a boundary control laws, regulations. There are risks involved, right? What's your view on this? Where are we headed on that? What kind of downsides do you see, and what are the watch-outs? What are the laws, regulations that we need on that?
Sure. Yeah, I mean, I think the industry might have to take a step back to understand what are the different segments that are there within AI, right? Not everything is as accurate or not everything is as advanced. And not everything is applicable to every other problem. Like from a complexity standpoint, generative AI LLMs are very, very complex, but that's not the answer for all your problems. If you want to build an underwriting decisioning engine, you don't use LLMs. You use XGBMs, deep learning, or problem-specific models, right? That's one. Second is categorization of these models. Am I using simple regression or advanced machine learning, deep learning, reinforcement learning? So there are categories of AI. Not everything is in the same bucket. That's the biggest problem that everybody makes. Most of the people makes, at least. Now, each of these buckets brings in advantages and challenges. One, let's say you went ahead and implemented something. Insurance is known for risk quantification, right? Now, the next immediate question is, what have we done on quantifying the usage risk of AI? For example, let's say I build an AI system which is helping me to underwrite 90% of my book. And what is that I have done by assessing the risk of these models, for example, meaning what if the model fail? What if tomorrow it acts completely erratic? Or how is the decisioning being made because there is some kind of legal challenges on it. So now I need to provide auditability, right? So these models, while they are complex, bringing in the advantages, there are disadvantages as well. This is where the regulations are now coming in, saying that, okay, so you are using AI for very sensitive use cases. So what kind of transparency should be there? What kind of non-biased matrices should be there? What kind of auditability should be there? So these regulations are going to come in very, very quickly for sure. Maybe next 1 year, 2 year, 3 year, whatever it may be. In Europe, there is already AI Act, which categorizes these use cases and technicalities of these models and tells you how you should do risk monitoring for these models, how explainable are these models should be, and all of that. So this is what I feel a little bit of irony, right? While everybody understands rules engine and comfortable with rules engines, they want to use Gen AI. But at the same time, they don't want to use machine learning on these problem statements. I feel that really surprising. Like you will have an immediate advantage going from rules engine to deep learning. But why do you want to fit in something which is very much not proven to a problem which you could use some other technique and solve it today? This is where I would feel a little bit of surprised that okay, so while you are comfortable with rules engine, you want to use Gen AI, which is completely black box, non-explainable, hallucinate. It can be attackable. I can attack the model and get the training data out of these models. There are a lot of challenges with some of these models. So one, we will see regulations come in. Second, we will see AI-specific risk management tools that are going to come in. It's not new. So you would have risk management tools for your software. You have antivirus software, right? You don't productionize any software without antivirus. Likewise, you will not productionize any AI/ML model without governance tools around these models. These are the layers that we are going to see going forward. While we talked about ML ops, we will soon see ML observability ops, for example, or AI governance ops, which sit around your models to ensure that these are safe, stable, and regulatorily acceptable by all stakeholders in the ecosystem.
Thanks. I think with these new technologies coming in, with also on the side, their applications as well as the guardrails coming in, the new frontiers are getting opened. And I think, Vivek, I'd like to come to you to understand, what do you see, let's say, real-time analytics, right? What Sundar just described in terms of creating the models, which are obviously frequently modified, but they are still not real-time, right? what kind of applications, what kind of cutting edge developments do you see with respect to, let's say, real-time analytics, automation, which will be instrumental in the insurance industry?
Thanks, Anirudh. You see, it wouldn't be an exaggeration to say that insurance is the field of data. We all of us know about it. And insurance is the sector and its players were never sitting idle on data. We were always churning data, using it for doing business in a better way from the day before, right? So that was how it was progressing. I think two perspectives we need to keep in mind when we think of data. One is external perspective. What is happening in India? And I would go with what Sundar was saying. He was saying that there is a business problem and you want to use the data for the business problem that you're solving for. Then the chicken egg story becomes a little more easy to solve for compared to otherwise when you go with the model and you say that there is a model that I have in hand, where can you use it? So I think the business use case comes first. Now, from an external perspective, I was saying that India, the digital penetration, of course, is more than 50%. One can argue that it is still behind China, which is probably was more than 70%, US more than 90%, but India has its own story and 50% is no less. And big chunk of it also sits in Bharat beyond India. And this is always on sort of customers, which is giving you advantage of digital behavior data, social media data that you can tap into. Second, the experience benchmarks are really being set by new age players and not always the incumbent players. Of course, incumbent players have their own advantages, but the new age players are giving instant gratification, and that's how they are setting new benchmark. Now, if you look at what happens in insurance and the advantage and disadvantage both that they have, advantage they have is they've got decades of experience with their customers, with their distributors, with their value chain players, and they know how it works. Disadvantage, there is immense value leakage that happens. In life insurance industry itself, which is close to about 8 trillion Indian rupee, 5 trillion Indian rupee went out as an outflow through claims as of FY22. And out of this, about, if I'm right, about 12% alone was for mortality claims. And this is where the industry stands for, mortality claims. Beyond that, there was a latest article that I was writing in media. It's called Customer Lifetime Protection. It just talks about in the entire life cycle, insurers first, they go to customers who are trying to build trust with them, and it's very hard for them to acquire them. Once they acquire, they keep getting dropped from insurance cover. And majority of these customers that I was talking about in the claims data that I was mentioning, this was due to the surrenders, the lapsation, the cancellation, and all of this was not warranted. So the problem that we have in hand is whosoever has trusted insurance proposition, how do we engage them? And in this, I've seen, at least in my experience, both in India and abroad, data advancement, data analytics, and real-time analytics has become extremely critical. A lot of insurers, including, a lot of insurers in India, are implementing data lake projects. They are really looking into data transformation fully. And real-time analytics has become the name of the game. So for me, the way I see it, and based on my interactions, this is the field that is going to grow and give a lot of real business solutions to the problem that we have in hand.
That's quite insightful. Thanks. Prerak, coming back, one of the areas where you actually get real-time data, possibly, is some of these new data sources, whether it is wearables, IoT, telematics. You get real-time data, and that data can be processed. And insurance companies have been really looking to capture these opportunities, right? Where do you think we are? What do you think will, where do we go from here on? What insurance companies need to do in that context?
So we've heard multiple views here today, right? Let's start with the very basics for a second. So insurers today are, I hate to say it, not ready to use a lot of these data sources. It's super exciting to see these in reports. We all talk about them. We say, hey, this is what the futuristic world will look like. At least in India, let's be practical. A lot of this is not ready today, right? Vivek just spoke about it. Think about it this way, that companies are right now starting to think about, hey, what's going to be do I need a data lake? What are the data standards that we need to use? Then you start to elevate up one level and say, hey, and we've spoken about these themes, the public infrastructure, the public workflow platforms that are there. Sundar spoke about the idea, you asked that question about, oh, look, IIB data or other data. So I think at least a lot of the insurers today are still in that stage of saying, what do I need to do with my data, right? What does a modern data stack actually look like? Are we really equipped today to be ready for a modern data stack? What they are doing is obviously they are picking off maybe one source, using their somewhere in an insurance product, and then promoting it, right? So there's a lot of PR and publicity that comes from, say, picking up a variable, counting step count and saying, hey, we'll give a discount. Easy to do, one piece of it, lots of PR, lots of publicity, but is really a step count the right metric towards giving a discount on an insurance product, right? I might be going swimming, so does that mean I don't qualify for a discount if I'm not doing the step counts? So we're just in one part of that journey of using that data real time. It's going to take a while. I'll also say something a little controversial, especially in context of, say the digital privacy, the new act, basically. But if I had to take a call on behalf of the industry, I would let one third player manage this entire modern data stack. Right, and not touch it and say, I will build the application layer on top, which is the insurance products, the claims journeys, and that's my specialization. If every insurer in India tries to rebuild this independently, imagine the time, money that's going to get spent for all of us to go do this. It's such a waste, right? It's not even the core skill set of an insurer. Why should they even get into, some of these pieces? It's going to be a disaster in my mind if everybody wastes a lot of policyholder money trying to redo all of this separately.
Great. So we have on one hand Vivek saying that here is the opportunity on one hand, and the other hand Prerak saying that okay, this is a bit of a pipe dream. Let's get some practical perspective. Sundar, I'm going to put you on spot. Where are you in this battle, and what do you really see is the real promise or the real struggles?
I think I'll go back to 7 years back when we launched the digital transformation. So what used to take 30 days or 40 days, we transformed that into, for some customers where we have data, issuing policies in minutes, say 5 minutes or 2 minutes. Now, not necessarily all, obviously. And that was using the Aadhaar data. Of course, before the Supreme Court judgment. Of course, now we again put back because now we are allowed to use the Aadhaar data. So I can see transformative jumps in the timelines. Now, is it real time for everybody? No, definitely not. We are not there. Is the economy there? No. Even I don't think all the entire set of population we have real time data. But I see lots of progress, lots of areas. IIB itself, I'm involved, so there's a lot of progress there. But is LIC part of IIB? No. So is the 4 top general companies part of that? Some bits. LIC again is PMMJJYY is part of the...
So 50% of the market is outside.
Yeah, you have a problem there and some bits of data there, PMJJYY is there. So but would LIC join? They are certainly part of the committee. Would they join? Maybe yes, later. So there are a lot of changes that are invading the country also and we're making progresses. Is there a thought process on that? Yes, definitely. Is there a thought process to supplement data? Is there a thought process to make it relevant? Is there a thought process to make it more real-time? Yes, answer is yes. But certainly we're not there. It will take years.
And by the way, I built my entire business on using data real-time. So to be clear, I believe in the promise of it, right? I'm looking 3 years, 5 years out.
Good to be grounded. Good to be grounded.
But good to be grounded, right? That it's not there yet. Everyone wants to do it. When you sit there on the table, the conversations kind of stop beyond the very classic, right? We've all bought a travel insurance with a trigger to pay a claim. Simple stuff, right? Has already happened. But the next level of innovation is possibly...
But if you look at NPCI and the UPI data, what they were the first year versus what they are after 4 years or 5 years, there's a transformative change.
Indeed.
I would just compliment, just allow me one.
Bima Sugam in the insurance industry with the same kind of setup. And in fact, all insurers are participating in capitalizing that. And I believe that after 2 years or so, if everything goes well, as always if, so by
A small if or a big if?
big if. So 2025 is something I see. I mean, 2024 would have all these changes. And 2025, expect lots of changes, lots of transformative changes.
Indeed.
Yeah, so I was just complimenting, what Sundar is saying. See, it's a journey. You can't expect changes to happen overnight. And as Prerak was saying, he built his entire business of real-time analytics. That was the concept that his business is thriving on. So there are pockets, there are use cases that will become successful. There are nodes of the value chain that will get simplified. And there is where the scaling possibility would be there. Whether it is going to happen, pan business across all regions may not be the case. Yeah.
When I coming to you, there is first-party data, which is, the customer-generated data, such as variables. In case of car, you can say telematics is also first-party data. There is obviously data that the insurers have with themselves, which is historical data that they use. Do you also see a use case or benefit of third-party data? And I would definitely say that the banking and lending or NBFC industry is actually a bit ahead on that as compared to the insurance at this point in time. Insurers are also trying, but do you see some third-party data which is also available in the Indian context? Some of it is based on proprietary data, some of it is public as well. What kind of data do you see being, getting leveraged or being, of the great value in the coming time?
Sure. I'll give you a very simple example. So I think most of you would have used Stripe, right? Stripe is an online payment transaction. So whenever you make a transaction on your web browser, there is CAPTCHA, right? Where you have to click on CAPTCHA, and then that information will be captured as part of the fraud detection. So CAPTCHA is nothing but it captures an instant information on your browser, what you have been doing, and use that information whether you are an actual genuine customer or a bot, thereby differentiates between are you a fraudster or a genuine customer, right? As simple as that can differentiate between fraud versus non-fraud. So any kind of third-party data that you can add to enhance the context of these nodes. When I say nodes, for example, one is user communication. So let's say I'm doing a self-purchase. So the way that you are going to capture your application data, so what is the customer, where did he started the journey, where did they started the journey, what did they do before they clicked on buy button, did they submitted multiple applications before submitted the final one, right? These set of information will enhance your ability to contextualize the transaction. That will help you on underwriting and claims classification in both scenarios. I talked about something which you could do from your own applications, right? The third party could be, for example, financial information. That is one of the key information that people want to use as part of financial underwriting. This could come in from alternate data sources or bureau informations, for example. So the way that I would probably think of this is I will identify these nodes. One is user conversational node, touchpoint node, financial, medical, and all this. And I try to find as much information as I can from third-party sources, such that when that underwriting application comes to me, it's not just 40 data points, which the customer has filled in. It will probably be 1,000, 1,500 data points, and then I can make a call. This information not just included to the customer, but this also can include about the agent as well. Because for frauds, agents are one of the core channel as also. So then you have to supply information about the agent. Okay, what is the agent activity on the application when he went to the customer? Did he created multiple sample quotes on the same customer? All the peripheral activities, whatever they have done before submission of the button, will become the input information for your underwriting data. This is when you could actually classify between a genuine customer versus a fraudster, right? This actually helps you a lot on also contextualizing some of the key observations. For example, one of the classic observation is negative pin codes. This is classic standard that industry uses. Whenever a claim or an underwriting policy comes from negative pin code, irrespective of the context, they investigate. This looks like a very brute force method, right? You're not contextualizing the transaction. You are simply having a bias. This is simply a bias-driven decisioning. There is no decisioning logic that I would think of. Probably you would have to add multiple data sources before I say, okay, negative pin code, the user activity is suspicious, and then maybe I will investigate because of these reasons. A genuine customer coming from negative pin code, I'll not harm him because he's from that area, right? All this third-party data can enhance the contextuality of the transaction, and thereby whatever the models that you're going to use, machine learning models or advanced models, you will have a plenty of data that the models can learn about. In a way, so your model's ability to understand these dimensions depends upon how well you're capturing these dimensions of data, how well, and next is the quality of these data. It cannot come from any data source, right? It has to come from a genuine data source as well. So these third-party data sources is going to be really important as we scale these AI/ML models or digital processes. While you could start with maybe a starting phase, but as you want to scale, you may have to add these additional data points as part of the process.
Thanks. I'm also conscious of time, so we'll get to the last segue. I'll come to the last section. Technology is great. I think data technology trends are constantly evolving. There is definitely change happening on ground. But a lot of things or the lot of impact lies in the quality of execution. And, Vivek, I'll come to you. You are, we are in a way in the same profession where we work with very different insurance companies and clients. What do you see in terms of the experience, in terms of what is it that the insurers or ecosystem collaborators need to do to really make it happen? What kind of organizational challenges have you seen? What kind of process-related challenges that have you seen?
Sure. Let me probably answer it by taking two sort of examples, one more from a different geography and one from India. So one example is from US. I'm sure many of you would have heard about Lemonade. I would also add that up with Hippo is another insurer in US geography. And how did this solve for experience stack using alternative data sources and what's really happening in terms of collaboration with the larger ecosystem? So Lemonade, I think we started long back. They use sensory-based data, and they look at the premises occupancy, some of the exposures in terms of, let's say, fire or burglary or something of that sort. And then they define premiums and also the sort of services and alarms for their policyholders. Hippo, who started, later, went still a few steps ahead. And what they did is they started to really also use data in public domain, including the property registration data to see how old is the property. Also using the meteorological data to look at the exposure level in terms of natural calamities, in terms of earthquake, flood, drought, and all of that. And then define that what should be the risk score, and then define the premiums, and also the services to really alert the policyholders what kind of risk that they're pursuing, and hence what they should do to really prevent that risk. So it went beyond the promise of just, settling claims. So this is happening, of course, abroad, and this is setting new experiences. What is happening in India? Of course, I don't need to name any insurer, but in health insurance space, the use of wearable is becoming very, very common, right? Using of wearable, promoting the right well-being of human, or whosoever are your policyholders, incentivizing the good health practices, and also, defining the premiums and renewal premiums accordingly, right? So this is setting a new benchmark completely in terms of experience. I would think there are two imperatives for insurer. One, in their direct to consumer cohort. In that cohort, they would need to be really laser sharp on what is beyond this, the promise of claim. What is additional value-added services that they can offer by really integrating with larger ecosystems. Second, there are a lot of need ecosystems that customers, of course, engage into beyond insurance. Not that everybody just wakes up one day and think of buying insurance. This is the day that I buy insurance. This is not how it happens. But people, of course, think many days that I would buy apparels, I would buy, something else, I would consult a doctor, I would go buy, I would take a loan. A lot of these things happen. I buy home. Where are those experience points, those need ecosystems that are mature enough for us to consider as an insurance company or a larger value chain players, and integrate with them and see what is the B2B2C cohort that it can offer in terms of protecting who are not protected or well protecting those who are already protected. I think these are the two implications.
Sundar, you have seen this from within the organization. It's not always easy to implement what the technology has to offer. What have been your learnings in terms of what are the fall points? What are the challenges? What others that need to overcome what you are overcoming right now?
I think every system that we implement, we need to have teams backing up that. So we have projects. So we have a projects team. We call them the CEO's team. So whatever is the CEO's vision, they try and implement that. So we have a large team there. We have an analytics team again, which sort of helps in data correlation, consistency. We have a Six Sigma team, which tries and implements the process excellence and certifications. Then we have the cybersecurity team to ensure that challenges posed by all these systems are taken care of. Then the risk management team, which does the operational risk assessment. And there are scores for each process. So there are a large number of teams that need to be working, and it takes time. Even the project that I implemented on the claim side to identify fraudulent claims or false claims beforehand, we did a 6-month correlation exercise of the data for last 3 years or 5 years. Then only we launched it in 2014 or 15. So it takes a lot of time, and then there is a legal team, compliance team to study, is it feasible, is it applicable, is it regulatorily compliant, and then of course seek IRDA's views, ensure that we are on safe boat. Because I don't want a problem later from IRDA saying, how did you do all this? This is not compliant. Luckily, Section 45 changed in 2015 or 16. It gave us 3 years' time to run after fraudulent policies. So you need to work together in all this. And you can't just buy a system, say, okay, up, skip, and jam, it will work from tomorrow or next second. No, it doesn't work that way. It takes a lot of time, monitoring, project monitoring, till you achieve some kind of excellence. What was 2% has become 98% or 97%, and it's a long journey, 6-7 years, in terms of digitalization. But when are we really digitalized real time? Answer is no. It's still there's a lot of interfaces, and still many customers feel that they should meet an agent, understand the product well, then decide. So there are lots of pluses and minuses of various channels, and you can't say that you don't need an agent, you don't need a broker, you don't need an intermediary, because they bring with them a lot of knowledges of products, customers, and again suppliers of these products. And then they give you pluses and minuses. If you go to Australia, every single decision that a customer makes, a person has to mandatorily give 4 or 5 insurance companies products, and mandatory. And that's the kind of compulsion that they have on purchases. So I'm sure it will come here also. There's no doubt about that. But are we ready?
I don't know whether it's a good thing or a bad thing, but yeah, let's see.
It's a challenge, yeah.
Yes, indeed. One final question to both Prerak and Vinay. You work with insurance companies, as a collaborator. Sundar just mentioned that within the insurance company, there is a compliance team, there is a legal team, there is a tech team, there is a business team. It is obviously not easy to collaborate across all such stakeholders. But I think there are new models of partnerships which are emerging, right? There are new ways of working that are emerging. There is more that the collaborators and the insurance companies can do together. Where do you see we are headed on that as an industry, as collaborators? How does the collaboration is emerging in the industry on these counts?
Yeah. Working model with insurer to insurer is quite different. The SPOC for us in one insurer may not be the same in another insurer. Sometimes the CIO would be the SPOC for us. Sometimes the operations COO would be the SPOC. Sometimes the CTO would be the SPOC. The clarity was what is the deliverables, ROI defined, and basis on that, there could be very simplistic models. For example, licensing anyways is gone by. any SaaS company nowadays is not at all pro licensing. They are primarily on subscription or usage based. These two models, right? Now the next set of personalization or the engagement model will be typically on either are we on subscription or usage based. This could be one thing. And second is co-creation. This is something that we are seeing happening in the recent times because people are now become more proactive on certain initiatives. They want to co-create and experiment, or they want to experiment and then co-create. In that case, they would also want to be the participant of the product growth as well. So these are the three models that we have seen, whether subscription or usage, and then co-creation as another phase. And we see similar models even with regulators or very large players like IIB as well. While they are good at processes and products, they want to have a partner who can help them on either transformation or AI enablement, for example, or future strategies, for example, like creating COEs and then experimenting quite quickly and strategize some of these initiatives. So in all these methods, very more known players or very large players are open to do this, whereas mid and small players are more towards on execution side, what can we do next? What can we do next kind of stuff. So I would say the thought process or engagement model is quite unique with insurer to insurer, and this is very flexible. And the good thing is they are open on participating and experimentation. Very few players, but they are still open to do that, is what I would say.
Thanks. I think Vinay's covered most of the points. I'll just add a couple of points to it, right? So basically, if an insurtech is going to an insurer and trying to work with an insurer, which is again a very large regulated entity, and in any market, right, basically, what tends to be is you've got to know within that market what are the regulations, right? What are the regulations around data? What are the regulations around what are you allowed to outsource or not allowed to outsource? What is it that usually insurers in the market will do in terms of using their own cloud or a data center or a on-prem versus being on the cloud. All of those become very, very important from a technology company and insurtech company's architecture perspective, right, when they're showing up. So the consent layers, for example, that have come up in India, right? If an insurtech company is not going to be able to manage those on behalf of an insurer, there's no starting point in terms of a discussion. So because what's got to be the case is these insurtech companies are offering some sort of solution, right? So they've got to make sure that they plug right in, or they will face an uphill battle, which will continue for 6 months, 12 months, 18 months in terms of getting integrated, getting an implementation done. That would be number one. Couple of ways around it, very standard, try to use APIs, try to stay away from the core of touching data up front. So it's almost like, you want to go shake hands, but first you say namaste, dur se say, don't send anything to me. Can I start something small without touching your core as an insurer? As we get more comfortable with each other, we'll actually shake hands, right, at some point of time. So, yeah.
Great. Very interesting when you said saying namaste before you shake hands. It's a human touch. I think what we all presented in front of you today is firstly what the technology promises with the specific flavor in the Indian context. What are the opportunities that we really see happening, the practical view of it. At the same time, what are the challenges that we see on ground and what are the practical ways to get it done and therefore embrace the technology. The topic that was given to me was embracing the technology. Embracing the technology is actually going beyond the handshake and actually then going to embrace it with a whole heart. With that, I'll bring this session to a conclusion, open for a few questions at the end, and that will be it from us.
Thank you so much, sir, for such a stimulating and profound discussion.
Maybe we'll have one or maybe maximum 2 questions given the time where we are.
Thank you. Very insightful panel discussion. What was going on in my mind was, what kind of people are driving this? With so many variety of skills. You have traditionally tech people and business people. Of course, a lot of tech people go and do an MBA and then come into the mainstream corporate world. But with Six Sigma teams, project teams, like Sundar described, legal team, this team, that team. How is this all moving? What kind of skills are driving all this?
So, yeah, you want to take it?
Yeah, I'll get that started. So I think very nice question, because this is what goes in our mind. I think when Vinay was explaining that my Spock is not same when I go to insurance company. At time it is CMO, then it is CTO, then somebody maybe CRO. I think when the embracing of technology comes into place, for insurance companies, more and more cross-functional teams are getting responsible. It is, at least, I mean, the way I see people who are really focused on transformation journey, people who are really focused on getting business outcomes right, they are looking at enterprise-wide view and they're building cross-functional teams. As such, of course, there would be a one leader for that team, that may happen, but cross-functional teams is the name of the game. Business going towards tech and learning it is becoming equally important, because if you are a business user, you can't define what you really demand from technology, then you are really not doing a good job out of it. Likewise, for technology people, it is actually, you're seeing a lot of tech people today here are really business leaders, because they could scale their knowledge in business and they really come on the forefront. So tech to business movement has been really fast. Business to tech movement also is happening on the same line, is what I am observing. Back to you, Anirudh.
Thank you. I think we'll go for the closure.
Okay.
I now request my fellow batchmates to present the memento as a token of gratitude to the dignitaries on the dais. Thank you, everyone.